Good evening, I'm Giuseppe Basile. I'm the Essentially. You can find at the blog www.fibstalker.com. I also post regularly on Twitter using the @fibstalker nickname. Good evening. Today is Thursday, March the 13th, 2014, and it's 11 p.m. Time in Toronto, and I'm going to record this video for you to review four majors that pound versus the US dollar, the Australian dollar versus the US dollar, the US dollar versus the Canadian dollar, and the New Zealand dollar versus the US dollar. So let's start from the pound versus the US dollar. Those who follow me know that I'm looking for pound to test this 165.40. This is a level we know now for more than 3 weeks, and the reason we are going to get there, this is because it's a level of support of a sequence of measure move, extension measure move on the weekly time frame, and you can review that on my weekly free newsletter. If you want to receive the free newsletter, go to my website and register for free. Only takes a few seconds. Typically in the weekend I send to all my subscribers a weekly review in which I show also the list of the path of least resistance in the majors and all the 11 markets I follow. So what's happening here is that we're going to test this 165.40, and today we had the test of the all the way highs to lows here. Not something that could be anticipated, but that's what happened. There was a way to look at this move on the smaller time frame. Let me show that to you. On the 4-hour chart here. Let's see if we could actually identify the sequence of measure move. We had an extension here, highs to highs, which broke price into first and very close to second target. So when price actually, even not knowing that there was this level of resistance here, but it's always good to trace highs to lows in order to analyze market. We knew that the sequence of measure move here was in jeopardy because of this because of hitting this second target, even if with a small front run. And then we saw the next sequence in the next measure move in the sequence did fail the 169.95 level here, and then we saw this move lower. So not a lot to add in this market. If we actually on the 4-hour charts now, we actually get a retracement into the all the way halfway back here, the 166.62 level would actually act as probably as a resistance, bringing price right into that or helping price into that 116.83, which would be the second target. Then look at the first target, and look at the second target that would actually line up with the level of support. So if we get this to this 166.63, consider a short if we don't move above the stop level at 166.77. Moving to the Australian dollar versus the US dollar, this market has been relatively strong today after we got that huge selling pressure, and of course news, they're scrambling to newspaper news are scrambling to justify that move. But sometimes, I mean, there are programs which just have to take profits and they do a profit targets, as we saw for the euro dollar before. So this market was into and is still into a measured move from lows to highs. This could only be identified after the fact, but once there we can actually use the information that we gather from the support level being there. We know that the first target is at 0.9170, and considering today's behavior in a market that was very weak for all over the board here, actually this behavior was refreshing and something very important. The 4 hour chart, we can actually identify the sequence of measure moves, and we have the first one to target, and the second one was this level. As you can see, this level of resistance which originated after a move that was actually um, was actually part of a reaction to a support level here. As we can see, the move anyway, the move short, the bears won here on this time frame, and we saw market going into the first target 088 89 089 89, excuse me, and the second target was 089 56. So as the second target was it, we would then trace the next measure move. And you remember yesterday I told you that above this level we could have bought with a stop below lows, and this would have been a good trade. Now this market went higher and eventually today corrected, and we started seeing a reaction to all the way halfway back here, and this is a very important development. And then this pushes us to study the sequence of measure move. Now this move lower today that followed the selling that has been all over the place actually does not show a lot of structure, so we are going to find the right anchor based on price action. As you can see, there was this first measure move to target, second measure move to target, and third measure move went to target, and again the four measure moves. So we had four measure moves from originating from this same anchor. So this same anchor is very important to program trading, and as you can see after the fact, not something I could say before, but if I didn't look at this market today during trading time, but I could actually consider this sequence, and actually that's what I'm doing at the moment as well. And as you can see on the 15 minutes we have target at 019 and 089.79. So this is the trace to keep in mind. We are still in a sequence of measure move short here, and until we break that important level, currently being 090.47, we cannot actually confirm lows to highs here. We cannot confirm support. I would like also to show that so there is a possibility for this market to continue lower here. Moving to the US dollar versus the Canadian dollar, you will remember that I mentioned this level of support now more than 3 weeks ago. It worked very well, and we had a first development here when we broke the highs to lows. I say that we had confirmed the targets above here. However, after this development, we had also another development, which is after showing here that program trading on the bear side failed. This market showed also that bulls failed, because we had this the failure of this other level. So when we have bears failing and bulls failing soon after that, then that's exactly the definition of indecision, and um, that's where uh, these formation that are very dear to traditional technical analysis come out. Um, these formation are a way we simplify the markets. We try to give structure to the market, but the very reason for their formation is the fact that we had a failure of bears, and after that we had a failure of bulls on this time frame, and then we had the formation of um, of the triangle. So this triangle is just a consolidation on top of a support level. This could well be a reversal formation, but at the moment it's a formation on top of support. I want to show you in the 4-hour chart, which is the chart that I'm showing you at the moment, the sequence of measure move we had and I had identified yesterday, and the resistance was at 111.21, which brought price into first target 110.74 and second target 110.50, and but eventually price got into this all the way halfway back on the other side, the bulls on the 4-hour chart, and there was a confirmation of this sequence when we broke the extension here. So here the entry would have been, if you were following this market, knowing the rules, you would have been buying at 110.72, not before, because you didn't have confirmation, with a stop below lows at 110.42. So this would be a 30 pips trade with a potential to bring price to previous highs, probably recent highs at 111.96. Finally, the New Zealand dollar versus the US dollar. As you know, we have in this market we had show support. This is a market that is going higher, it's not going lower like the Australian dollar, although the Australian dollar had a nice behavior lately, and we have targets here above at 087.45. If we look at this chart in the long term, and in the last few days on this time frame, I've been looking at this extension long. And actually the market barely respected it, so I did not look at the exact anchor program trading was looking at. We had you could trade this entry at 084.56 if you were a little bit forgiving on the stops, but and actually this would have brought price actually today into that second target, right? The point is, my belief now is that that was not the right level, and there's nothing I can do about it, or I can only notice this after the fact and show you here that the actual level to consider was the 084.33, and market actually didn't get to the second target of that support at 086.30. So if we get a retracement here, there is still the possibility for this market to move into the highs to lows and actually still be in a move higher. So let's see what happens in this market. If you took the previous trade, you should have exited at the second target that we touched today, so congratulations for that. And sorry, this would have been the trade from the highs I showed in the last few days to highs. And if you do this trade, of course you exit the second target, and then there was a set of program trading following this trade as well, and we can see it clearly from price touching that second target and eventually selling off from there. I hope this video is useful. I wish you a very good evening. nice and slow trading day. Tomorrow is Friday, so nothing is gonna happen. And I wish you a great weekend. Thank you very much for tuning in. Bye bye.